Bitcoin is trading at around $89,600 this morning, marking a modest 1.24% gain in the last 24 hours after a brutal 6-day sell-off that crashed it below the critical $90,000 support level, according to fresh data from Trading Economics and CoinMarketCap updated just hours ago. This pullback from recent highs near $97,190 has traders on edge, with breaking news today highlighting intensified global risk-off sentiment driven by escalating geopolitical tensions over Greenland and surging Japanese bond yields signaling more Bank of Japan rate hikes. In this video, we'll dive deep into the freshest Bitcoin market data from the past 24 hours, covering price action, technicals, whale moves, liquidations, macro shocks, and a week-ahead outlook, prioritizing only the most recent developments from sources like Glassnode, CryptoQuant, and CoinDesk breaking alerts. If you're a Bitcoin trader watching volatility spike, hit that like button now and subscribe for daily fresh updates on BTC dominance. Shifting to Bitcoin's price action over the last 24 hours, the King coin rebounded slightly from lows around $89, $340 to current levels near $89. 600, but the overall trend remains bearish after breaking key support at $90,000, as detailed in DailyForex's latest signal from this morning. This drop mirrors a broader crypto market crash, with BTC down over 9% from its yearly high, wiping out early January enthusiasm that started the month at $87,000. Fresh historical data from CoinMarketCap shows yesterday's close hovering in the $92,500 range before today's dip, underscoring accelerated selling pressure amid waning spot demand. Polymarket bettors this morning pegged the highest odds at 51% for BTC, staying in the $88,000 to $90,000 band by end of day, reflecting trader caution. As we transition to technicals, these levels are setting the stage for potential further downside. Bitcoin's technical picture from TradingView charts updated this morning paints a decidedly bearish setup, with the price slicing through the upper edge of an ascending triangle pattern, and now trading below both the 50-day and 100-day EMAs. Key support levels to watch are $88,000 as immediate defense, followed by $85,000, where sellers might pile in per DailyForex's fresh bearish signal, targeting that exact point with a stop above $94,000. Resistance looms at $92,000 initially, then $94,395 aligning with the broken triangle upper side. Bulls would need a strong close above here to flip the bias. The percentage price oscillator shows a fresh bearish crossover on the daily time frame, confirming momentum shift. RSI is hovering in oversold territory around 35, hinting at possible short-term bounce, while MACD lines remain deeply negative with no bullish divergence yet. Moving averages cluster bearishly, and Bollinger Bands have expanded sharply, signaling heightened volatility. Next, we'll unpack volume confirming this breakdown. Diving into trading volume and liquidity from major exchanges like Coinbase, Kraken, and Binance, fresh data from the last 24 hours shows a surge in activity amid the crash, with total BTC spot volume spiking over 20% on Coinbase Pro to levels not seen since early January highs. However, CryptoQuant's latest exchange flow metrics reveal net outflows slowing but still negative, indicating some profit-taking rather than fresh buying pressure. Liquidity remains thin below $88,000 per order book snapshots from this morning, making slips to $85,000 plausible on low volume. Breaking news from Glassnode this morning highlights whale activity ramping up, with several large transactions over 1,000 BTC moving to cold storage, suggesting accumulation by big players despite the dip, countering retail panic selling. Funding rates on perpetual futures have flipped neutral from positive earlier today on Coinglass, easing long squeeze risks but underscoring shifting sentiment. This whale resilience transitions us smoothly to liquidation data. Today's liquidation heat map from Coinglass makes for grim reading on Bitcoin, with over $500 million in positions wiped out in the last 24 hours, heavily skewed toward longs at a 65-35 long-short ratio. Fresh data shows the bulk hit below $90,000 as leveraged bulls got flushed. Total liquidations peaked during yesterday's plunge to $89,140, amplifying the downside momentum and creating a self-fulfilling prophecy amid risk-off flows. Short liquidations were minimal, allowing bears to maintain control, but current funding rate neutrality suggests the cascade may pause short-term. The Fear and Greed Index from Alternative.me sits at a chilling 24 this morning, deep fear territory, for the first time since late December, down sharply from neutral readings last week and echoing 2022 capitulation lows. Historically, readings below 30 have preceded bounces, but only after prolonged squeezes. With macro news piling on, let's examine how global events are hammering BTC right now. Fresh macroeconomic developments from the last 24 hours are crushing Bitcoin's risk asset status, starting with stock markets erasing 2026 gains. S&P 500 and Nasdaq both down over 0.5% today per real-time updates, while Dow Jones mirrors the slide amid World War III fears escalating from political rhetoric on Greenland, as CoinDesk breaking news reported earlier this morning. The US dollar index DXY surged 0.8% today on safe haven bids, pressuring BTC inversely, while Treasury yields ticked higher with 10-year notes up 5 basis points. No fresh Fed statements today, but ongoing policy hawkishness looms. Geopolitical tensions, including EU threats over Trump's Greenland push, and Japanese 40-year bond yields hitting decade highs signaling BOJ hikes, are fueling global risk-off, as noted in DailyForex's latest analysis. No new CPI or inflation data dropped today, but these moves confirm correlation breakdown. Institutional flows show spot BTC ETF outflows, continuing for a second day per CryptoQuant, contrasting MicroStrategy's recent buys. This macro storm leads directly to breaking Bitcoin-specific news. In breaking Bitcoin news from the past 24 hours, 99 Bitcoins reports no more bullrun vibes as BTC slides under $90,000, with Coinbase CEO Brian Armstrong at Davos today, dismissing the crash as temporary and doubling down on long-term optimism, echoing Kevin O'Leary's call for regulatory clarity on energy use. No major exchange outages, but Binance volume leads with high liquidity despite the dip. Regulatory front quiet, though Greenland geopolitics indirectly spooks crypto via risk assets. Mining difficulty held steady per latest adjustments, hash rate stable, no Lightning Network bombshells today. ETF flow data from this morning shows continued outflows totaling $200 million yesterday, per fresh trackers, pressuring price. Whale transactions on-chain via Glassnode logged several 5,000-plus BTC moves to accumulation addresses, hinting at smart money buying the fear. No new announcements from Michael Saylor or MicroStrategy today, but their treasury strategy underscores HODL amid chaos. Now, analyst takes from the last day. Fresh analyst perspectives from the last 24 hours are scarce but pointed. Willy Woo's latest on-chain update this morning via Twitter notes whale accumulation, accelerating below 90K, aligning with Glassnode data, and suggesting dip buying before macro clears. Plan B's stock-to-flow model remains bullish long-term, but warns of short-term volatility from DXY's strength in his recent post. The Trading Parrot's fresh chart breakdown today targets 85K support if 88K fails, matching daily Forex signals, while urging caution on geopolitical headlines. No new Willy Woo deep dive or Plan B update beyond that, and Michael Saylor silent today post his November buy spree. Institutional voices like Armstrong provide the bullish counterweight. These views synthesize into our week-ahead outlook, balancing bull and bear cases based purely on today's data. For Bitcoin's price outlook over the week ahead, the bear case dominates short-term per freshest technicals and macro. Expect tests of $85.000 support if stocks keep sliding, and DXY grinds higher, potentially liquidating another $300 million in longs en route, with fear and greed staying sub-30 signaling capitulation. Geopolitical flares could push to $80,000 in extreme risk-off, though oversold RSI might cap downside. Bull case hinges on whale buying absorbing supply and funding rates turning positive. Break above $92,000 resistance could spark relief rally to $95,000, especially if S&P stabilizes or ETF inflows resume. Polymarket odds favor consolidation in 88K, 92K at 84% combined probability by tomorrow. Volume needs to confirm any bounce above average for conviction. If you're trading this, what's your BTC target for Friday? Drop it in comments below, like if this fresh analysis helps, and subscribe for tomorrow's update. Wrapping up the fresh Bitcoin breakdown, today's 1.24% bounce to $89,600 offers no reprieve from the 6-day crash fueled by ETF outflows, geopolitical WW3 fears, and stock plunges. Whales provide the lone bright spot with on-chain buys. Technicals scream bearish below 90K, supports at 88K, 85K, resistances 92K, 95K, while liquidations skew long heavy and fear at 24 screams opportunity for contrarians. Macro headwinds from DXY, yields, and global indices persist. No Fed news but risk-off rules. Analysts like Wu see accumulation, Armstrong calls it temporary. Bull to 95K on relief, bear to 85K on more pain. Share your take on whale impact from today's data, smash like, subscribe, and hit the bell for breaking BTC news. You won't miss the next move. Bitcoin traders, one more engagement. After this morning's whale data and liquidation flush, are you buying the dip at 88K support or waiting for 85K confirmation? Comment your strategy based on the fresh fear and greed reading. Share this with your trading group and let's discuss in the replies. Stay vigilant on these developing stories.